Taking a look at the charts, actually taking a look at the news, we're going to have quite a bit of movement this morning. We already have oil moving up fairly significantly, up over 3.5%. We got the jobs data out this morning, which by the time this video gets posted, that will be released. Keep in mind, the markets, are going to be all over the place. There's a lot of things setting up from a technical standpoint for a big move up or a big move down. Usually it takes a little bit of data here to trigger something. And keep in mind, anything that happens around the economic news, if it's a news-driven move, tends to be given back within the day or within a couple trading sessions. So we'll see how all this shakes out. But overall, equities are trading slightly lower. Let's jump over to the charts. We have the NASDAQ down about 0.25%. All the indexes down about 0.1% or 0.2%. I think the key here to look at, we talked about this in a video I shared the other day. We've gone from having these short-term FOMO waves in the market, which when we have FOMO in the market is when we see the stocks usually move down. And FOMO is everyone piling in. This is our own custom indicator. It tells us when everybody is just buying on the ask. They don't care what price they get. And when they're all doing that, when we see that, that usually means the move is over. Savvy investors are already in, traders are in, and now it's just the media sucking in the rest of the people. And every time we see this, we see the stock market want to move down. And we had another big signal a couple of days ago. We had that huge gap up on news with Trump talking about tariffs. It was bullish for the stock market. It created FOMO in the morning. And then, of course, we saw a move down later in this session. We saw a little wave of bounce of FOMO again the next day, and that trend continued to move down. So now we're going to see how things unfold. Just the other day, we saw fear, panic selling. And we talked about this, how once we get panic selling, the market's usually going to carve out a bottom and have some type of bounce and pop. And so that's what we're potentially going to see today with the jobs data that's coming out. People will say it was triggered by the jobs, but really the charts are flipping and flopping. They do this without these market setups happen before the news. And if we look at the market, we can see we're testing at the 50-day moving average on the NASDAQ. And it could have a big pop here. It also could have a big drop. So it's going to be a very big turning point, potentially Friday, Monday here. We'll see how that unfolds with these trends going forward. Now let's take a look at a little bit of economic data. When we take a look at a few things here, I believe we are in a stage 3 topping phase. Now it's camouflaged. The majority of stocks are struggling, but the indexes are making new highs. I believe we're still in this complacency move. A double top in the stock market is actually happening with the majority of stocks. And a lot of that, the technicals here, when we take a look at the emotions of the markets, I think there's a lot of complacency going on. People have been piling in. When we look at our banned hot list, the hottest sectors, this last rally that's happened has been all in on the ARK ETFs, Bitcoin, blockchain, lithium, you name it. All of the aggressive type of stocks have been moving higher. And that is telling us that we've got this complacency. People think we're starting a new rally, but the reality is underneath the hood, the markets are falling apart. And if we take a look at some of the economic data, this here is kind of interesting. This is the amount of hires that's going on. So we're seeing fewer companies hire. So that means people are tightening up. And I've talked about this. I meet with a big group in Las Vegas every few months, and everybody's trimming back their employees. They're tightening up. They're streamlining because business and sales are slowing. And the only way they can keep their profits up and keep growing is to start cutting expenses and streamlining business. And so that's what we're seeing there. If we take a look at this next one, this is job openings. Obviously, they're very related. There's fewer job openings, which is why there's fewer people being hired. Kind of pretty much the same looking chart if I was to just flip back and forth between the two. Also, of course, if we take a look here, we were starting to put in a major market top back in 2018, 2019. We were ready for a big correction. We did have one. It was by COVID. It was a big event. And then, of course, we had all kinds of manipulation with the financial systems and all that stuff with COVID, re-energized the markets. But we are getting close to a pretty major top. We are also getting very close to a major top in 2015, 2016. Everything was starting to stall out. This is when Trump came in the first time and made things bullish for the markets, and it created that next leg up. So the markets kind of got trumped. If you play cards, Trump came in and instead of the markets having another correction, it pushed things higher. Just as we were about to have another major market correction, COVID hit. It was a flash crash, a whipsaw, news-driven move, and then manipulation. And now we put in a top, and job openings are falling, and we're back down to a level here, but we could see much bigger drop. And this is when we're going to see unemployment really start to take off. So things are slowing. I think this process could still take several more months to unfold, but that's kind of it in a nutshell from an economic standpoint. For unemployment and job openings and things like that. The other thing here is housing pricing. I showed this a few months ago, and if you're obviously a technical trader, we usually have a rally up. You have a bull flag pattern, and then you have another rally and a bull flag pattern. And as we know, if this bull flag pattern fails and it breaks to the downside, we're going to see a very big drop. And so what we saw back over here in 2021 and 2022 were like no homes for sale. There was really no, you just bought whatever was available. As soon as it came on the market, it sold. There was no inventory. Now home prices have faded down just a little bit, down 15, 18, 20%, depending on the area, but they're not selling. And now there's thousands, there's millions and millions of homes for sale. You can kind of pick whatever you want. But prices aren't dropping and they're not selling. And eventually we're going to see the prices drop and we're going to see this really pick up speed. So this is when we're going to, I think, see the economy change gears. I was talking about this with somebody the other day. Everyone who owns a house, most investors in the stock market have at least their own house, if not multiple properties. And once we start to see home prices collapsing and they drop another 5, 10, 15, 20%, people are going to be like, whoa, I just lost hundreds of thousands of my house value. They're going to start to worry. They're going to start to pull money out of the stock market. They're going to feel pain on all aspects. And that's what's going to trigger people to slow down with their spending. And businesses are going to slow down and hire less people. So all of this stuff is going to compound and create quite a scenario. So let's go back, take a quick look at the charts. Equities are down a little bit this morning. Everything's going to go haywire with the jobs data. That is normal. It's going to be a big pop, a big drop, and we just need to let the dust settle. Don't read into the news too much at this point. Gold is up a little bit, about 0.5% this morning. It's had a nice run over the last few sessions here, drifting its way higher. I've been expecting it to move up and to the right as a defensive play. The jobs data is probably going to create some type of whipsaw in all of these charts here. But keep in mind, again, it's just news and we just have to let it shake things out. Don't get caught up in the hype. The big move today, though, is crude oil. It is up almost 4%, having a big pop in price. It has been kind of trading down along this lower support level for a very long time, trying to hold up, and it's making a new reaction high back up to the top here. So this is going to help the energy sector. We'll probably see the Dow Jones do fairly well or be a top performer today potentially, which it already is. It's down the least amount today, and that's probably because we got industrials, we got energy stocks doing pretty well. So if we take a look at XLE real quick, we can see in pre-market in this lower chart, pre-market, it closed over here, and we're seeing it trade sharply higher this morning, and that's where we're seeing some money flow at the moment. If we go and take a quick look at the chart of bonds, they continue to bleed out. They're in this strong downtrend. We'll see how this unfolds. They're not an investment at this point. Really, just let it build a bottom and work itself out. In terms of fear and panic, actually going back to this first chart where I showed you how we have these waves of FOMO and waves of fear. I talked about how we had these moves, and initially we're looking for saying we'll see potentially a short-term bottom here once we have some panic selling. So the VIX spiked first, and this is typically how it unfolds. The VIX will have a move up first, which we had about 11% move in the VIX. It pushed up, and then we tend to see panic selling on the markets. So fear rises, and then the next couple days, people start to dump their shares, and we start to see this indicator spike. That's telling us people are dumping and selling their positions. Once they have dumped and sold their positions, they go and they start to buy put options, betting on the stock market to fall because they believe the market's going down. And we saw a huge pop in the put call ratio. Majority of options traders were buying puts. So they got scared, they sold all their shares, and now they're buying these lotto tickets, put options, expecting the markets to drop so they can try and make some quick, easy money, which is generally not the case in the stock market. if there is quick and easy money and you're trading that way, you usually eventually give it back with a quick and terrible loss. That is volatility. That is what happens when you mess around with this type of stuff. So we'll see how things unfold. The markets are saying we could see a big bounce that could last a day or two. It coincides perfectly with the jobs data. People will say, oh, the jobs data did it, but the charts have already built this into it. This is already set to happen. So we'll see how this unfolds for the session. Other than that, I think that is about it. Let me take a look. If we take a quick look at our strategy, our asset reinvesting strategy for the QQQ, we've had a very nice move, hit our first target, came up, hit our 10% second target. And right now that market is in this limbo, which is why we don't really care what happens. We don't care what the news is. The market is not favorable to hold stocks right now. We have to wait for either we're in a different asset class, obviously waiting for the stock market to give us a new trigger. And until then, we are going to wait. And eventually we're going to see if the stock market starts another leg up. I mentioned there's about 11% upside in the NASDAQ if some type of good data kicks in, Trump kicks in place, and we see another Trump kind of bump in price. But this market could go either way, and that's why we're out of the equities markets, riding a different asset higher and waiting for that to unfold. One last thing, I have mentioned I'm going to do a Fibonacci video about how I use Fibonacci. It is super simple. I'll probably show how to do it in eSignal, which you all have seen me do 1,000 times probably, but I will also show it in TradingView. Although I don't use it, I'm pretty rough with it. I have tinkered with it. I want to show both views because it seems like a lot of people use both platforms. And on that note, Fibonacci is in everything. I had a good conversation with one of our subscribers last night talking about Fibonacci, and I find what I'm going to show you in the video is so simple, and it makes trading really simple to follow and have targets and support levels. But this is a video here. This is typical Fibonacci. This is the shell you usually see with all this stuff. This is a music, an audio track I listen to while I work and read and things like that, and has special sound waves. And I thought I'd just share it. I'll put a link in our post here as well for you to listen to this while you're focusing and reading and working or doing any of that stuff. And it's pretty good, mellow, deep kind of tone that has vibrations that help kind of heal the body and allow you to kind of focus and have clarity. Anyways, that is it for now. We'll talk to you soon. Bye-bye.